Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Paul Krogdahl and Ville Sointu. This is Fintech Daydreaming.
Hello, and welcome to another episode of Fintech Good, all the fintech goodness you would ever want, brought to you by your friends here at Fintech Daydreaming. My name is Ville Sointu. I will be your host today for this episode, but of course, I will never do this alone. I always do this with my good friend and co-host, Paul Krogdahl. Paul, have you recovered from the May Day festivities here in Finland?
I have indeed, yes. It was actually a very quiet one. And I noticed their introduction, you didn't make the same mistake as me last time and put in the partner in crime, which we've actually had an awful lot of comments and feedback on, right? That was a touch and go situation there at the beginning. So thank you for leaving that purely with me.
We did clarify that it's not financial crime, though. It was just partner in crime. So
we did not fail any KYC or AML processes.
Yeah, we're fully compliant on this front, so that we're all good to go. And speaking of good to go, I think what we need to do now is bring in our guest today. And we sometimes say that our guests don't need any introduction, and I think this is one of those occasions when our guest really doesn't need any introduction. But nonetheless, we have him here, the man himself, Chris Skinner. How are you today, Chris?
Yeah, I'm brilliant, and trust you guys are good too.
Yes, we are indeed. It's a little bit late for us to record at this hour, but I think the later it is, the smoother the conversation I think we're gonna have. But hey, Chris, we did establish that you need no introduction, but just in case that there's somebody in the audience, like my mother perhaps, who hasn't perhaps heard of you before, how did you land here? How are you today talking in a fintech podcast, and what's your background?
So I spent many years working with technology in financial services, and then was made redundant in 2002 and started to write about technology in financial services. And it ended up that I started blogging in 2007 every single day about technology and financial services, producing 17 books about technology and financial services, which is now called FinTech. I was in the right space at the right time. I'm a lucky guy.
Yeah, it's funny. I think this term fintech came around, I don't know, 2010, give or take. But at least I feel I've been working in financial technology for at least 20 years. But yeah, fintech before fintech was fintech. I think that's what we like to say. But Chris, we have to get one thing out of the way. I know our listeners are waiting for this every time, and that's that we ask our friends here, in the friends of the podcast and guests on the podcast to do a joke in the beginning of the podcast. And Paul actually likes to do it in the end, but we're going to do it in the beginning now. So, Chris, would you have a banking or a fintech related joke for our listeners?
Yeah, it's a really bad one, but basically, Batman decided to throw a Bitcoin party and invited the Justice League over to enjoy the evening. And Wonder Woman was there, Aquaman, and the Flash, Green Lantern, but no Superman. So Batman rang Superman and said, "Where are you? You should be at my party." And Superman said, "You should know I don't do any crypto nights."
I actually think that's one of the better ones we've had on.
But that was actually one of the best ones we've ever had. So yeah, I think our standards are a little bit different, but well, that's good. Crypto and superheroes in the same joke. It's definitely an achievement. Fantastic stuff. But hey, let's get on with the conversation. I love the fact that you're here with us, Chris, because we have so much to talk about. You said you've written 17 books, and we're going to get to talk about the book a little bit later as well. The latest one you did, which is an interesting one. But I thought that it's would be good to kind of get some of these basic conversations out of the way. And since we have a person like you with all the history and in this area and a very active writer also in the area of fintech, we have to ask, of course, What are the current hot topics in fintech that are on top of your agenda, on top of mind for you today? So when you go and talk to people about the hottest topics of today, what are those things? 2, 3 of the coolest things right now in fintech?
Well, a lot of stuff has been done and replicated worldwide. So fintech started with a third of the companies dedicated to payments processing. So payments is done, in my view. Stripe, Adyen, Alipay, the other guys, it's all done. It's not necessarily finished, but it's an area that I think is not fertile in terms of for growth. I still think a lot of corporate treasury and investment areas are underdeveloped from a fintech viewpoint. If you said, what are the leading corporate treasury investment fintech startups out there, the list is quite narrow, and probably eToro would be the top of mind one that comes into my head. But there needs to be more in that space, because I think that's a great opportunity. And the reason why it's not attacked is because it's more difficult to deal with B2B than B2C. So the challenger bank community is, again, well developed. And what's interesting for me, top of mind, is the challenger bank community is now getting the repercussions of their naivety, in that we've seen N26, Monzo, and others now being targeted by regulators for lack of know your client KYC onboarding during their processing of new customers, and that's a big challenge for them. In fact, what's interesting in that context is Starling Bank, because Anne Boden was a banker by nature, and so they seem to have circumvented the issues that the more young challenger banks are now encountering. And I think right now, when we look at the technologies that are out there, artificial intelligence is the number one for me, in that, when you talk to banks about artificial intelligence, they talk about chatbots. Well, that is so basic. It's step number one on the ladder. And let's say the ladder has 10 steps. I'm on step number 5. I'm thinking far more around avatars and natural language and speech recognition. So when we get to that stage, I think we'll really start to see some rock and roll.
Yeah. I'm actually wondering very quickly, Chris, I mean, there is a dynamic or I won't know if it's a battle or what we want to say between big tech and fintech. Do you think big tech are going to win this sort of fintech war going forwards?
Well, I just did a conference with Google, and I shared with them my view about big tech and big banks. And as far as I'm concerned, it's a partnership. It's not a competition. Most of the big tech companies are nibbling around the periphery of finance in terms of loans and payments and credit, but they're not getting into deposit accounts because it's got a compliance overhead that's far too challenging for a big tech to be bothered dealing with. So they'd be better off partnering with a bank to do banking and not trying to do it themselves. And particularly because if you look at the big tech companies, particularly Facebook and Google, why would they want to bite the hand that feeds them? Same with Amazon, because advertising, cloud services, that's where they're making huge revenues from the financial industry. Why would you want to throw that revenue line away?
Although at the same time, they are looking at embedding banking capabilities, banking as a service into their platforms. So it does create some dynamic of minor competitiveness between the banks, the fintechs, and the big techs, right?
Well, I've always said, if I'm a bank, I would rather be the partner of one of the big techs. And if I'm the first partner, then the second one doesn't get a look in. So I'd rather be there first.
Yeah, I think the line goes at the regulation. So I don't think the big techs want to risk getting regulated, or at least have some kind of same kind of supervision as a financial institution would have. Even though we've of course seen acquisitions a lot with Apple, for example, on the open banking space, but I think that's more about getting more efficient payment rails done at one point in time. But I do want to go back to one of the points you made, Chris, about the challenger banks, challenger banks that maybe took some shortcuts in the beginning in terms of onboarding and maybe not doing their KYC properly. Do you think that these challenger banks, these new banks or new kids on the block get, I don't know, lighter touch supervision from the regulators, or what do you think that actually happened in the first place?
It's really about how they launched and how they've grown, and the fact that they didn't necessarily understand all the detail. When you look at a big multinational bank, it deals with about 128,000 regulations. When you look at a technology company, it deals with about 25,000 regulations. So 5 times more regulatory oversight and government involvement in your processes means that you can easily miss a trick. And I think a lot of these guys, when they launched, didn't have necessarily all the right people on the team. And specifically, when I look at some of the neobanks and challenger banks, I think that they didn't have someone like me, wrinkled with grey hair, who could give them the guidance. And what's interesting right now is, because of the pandemic and everything that's going around, we've seen a massive surge of business for neobanks. But at the same time, have they actually got the right checks and balances in place that complies with all the requirements of those 128,000 regulations? And that's where they're getting exposed.
So I'm wondering, do you think we're going to start seeing a growth of mergers and acquisitions where the big banks will basically buy the challenger banks, neobanks?
And vice versa. What we're going to see, we've already seen some of the new banks buying small banks. So a good example would be Lending Club buying Radius Bank in the USA, for example, and the same with one of the German banks being acquired by a fintech startup in Europe. And I think we'll see both, that some of the big banks will be acquiring capability and the big techs. You mentioned Apple acquiring a UK payments company. It's really just all about the ebb and flow of business. And one of the things I keep pointing out is that if you went back 20 years to 2002, there was no Facebook, Google was just starting, and everything in our world today was embryonic. So 20 years from now, who knows what this will look like.
So then we have to pick up on the other topic you mentioned, which is of course a hot topic even in our podcast quite a bit, and that's the AI in banking or AI in financial services. So artificial intelligence, step one. I know my bank has a chatbot, and I think it's kind of an investment advisor slash Q&A bot that we have on our internet site, and it works fine, I guess. And then there's a lot of back office things happening with the transaction monitoring. But you mentioned these step 5 applications on AI, and you mentioned avatars. Could you talk a little bit more about what does a banking avatar look like, and has that something to do with the metaverse, perhaps?
Yeah, I mean, where we are today is on the early days of artificial intelligence, and the example of that is that most AI can do one job, like play chess or AlphaGo. When we get to general artificial intelligence, the systems can multitask and do several jobs. And then we get to super artificial intelligence, where the machines are more clever than Paul, which is not difficult. Sorry, Paul.
Oh, that's perfectly okay, Chris.
So it goes in layers. Ex Machina, which you've probably seen the film. If you haven't, it's a great film about robots and AI. We will get to a stage eventually where AI becomes something that you find difficult to separate from real life. And going to the point about the metaverse, the metaverse is meant to be an alternative life that's digital, that you can live and maybe enjoy more than your physical life. And it's definitely going to happen because I'm a huge fan of science fiction, and most science fiction becomes science fact eventually. And if anyone watched Star Trek: The Next Generation, Jean-Luc Picard, when he was younger, they had the holodeck. And that is the metaverse. You literally go through a door and you're living in another world that's tangible. You can touch and feel and believe that world exists, but it's completely digital. It's not a real world. And that's what the metaverse is. And when we get to that world, we're going to have a metaverse bank, and check out metaverse-bank.com or metaverse-coin.com. That's me. And that world will need banks, but the banks will probably be the same as those in the real world, and that this has been evolving for many years. The holodeck Star Trek was 1990s, but in the 2000s there was something called Second Life. You may remember Second Life. If you don't like your first life, get a second life. And Second Life failed. And the reason it failed is that the banking system in Second Life failed because the operators, Linden Labs of Second Life, didn't regulate the financial system, which was a real financial system. They had Linden Labs dollars that could trade into US dollars. And they let the bank fail. And then for 3 months, there was a virtual demonstration outside the virtual headquarters of Linden Labs. And they eventually said, you know what, to be a bank in the virtual world, in the metaverse, you've got to be a bank in the real world. That's why we have banks.
But that actually sort of brings another discussion that I repeatedly have with an awful lot of people around the whole metaverse and banks in the metaverse, and even doing banking in the metaverse. From my perspective, to a certain degree, I don't think we're going to end up in a situation realistically where we're just duplicating bricks and mortar banking in the metaverse. I think we're going to end up in a situation where banking is going to be in a different format, in a different way, more embedded and maybe unconscious banking capabilities. And I'm wondering whether, one, the banks are ready for that, and two, maybe, do you agree? What do you think?
Well, if I was living in a virtual holodeck universe in the metaverse, then I don't want to think about paying and banking.
Exactly. And going to a branch.
And I don't like the word embedded. Equally, I hate the word channel. So if anyone says omni-channel or multi-channel, I kill them. And the reason being is that these are alien words from the last century. And embedded is a industry internal view looking outwards rather than an outward view looking into the industry. So I talk much more about invisible banking. In that it just takes place without me having to think about it. And I can set alerts and warnings around my account, but I don't have to think about, if I'm flying through the metaverse, that I just bought some Gucci pants and had to pay for them. I'd rather just get the Gucci pants, and if I've gone outside my limits, I get an alert saying you need to top up your accounts. So I think where we get to, it's not embedded finance, it's invisible finance. It's where finance takes place within the virtual world that I'm living in when I'm not at work, when I'm not in the real world. And I just enjoy myself without having to think about money and finance. But it does require money and finance. And that's the underlying point. Now, the interesting aspect there is, what money and finance does the metaverse need? Is it crypto, or is it central bank digital currencies and formal banking? As I say, I think it has to be formal banking, because Second Life failed because it had no formal banking system. But the formal bank could be Coinbase, or it could be Binance. It could be something other than JP Morgan Chase and ING. So that will get very interesting to see how that plays out.
Yeah, we've seen what the banks are trying to do in the metaverse. We've seen JP Morgan open a branch office, and we definitely saw that back already in Second Life, when banks started opening branches in this digital environments. And surprise, surprise, people don't want to go to branch offices in the physical world. Why would they want to do that in the digital world? I was just last week, I was joking in a conference that they should implement like a queuing ticket machine in the metaverse, and then you need to take a ticket, and then you have to sit in a lounge for 10 minutes and just wait to get to the clerk, just to make it authentic. And that's definitely not the way to do banking in the metaverse. Chris, you observe this space a lot. Have you seen any interesting companies, or who's actually doing it right? Have you seen anything that's happening that's been done right in context of metaverses when it comes to financial services today?
I think it's too early days. So at the moment, most people are talking about Decentralized, which is the place to watch. And as you say, some banks have formed some experiments in that space, but they are experimental. It's very early days. And at the moment, I guess the most exciting things I'm seeing is really around the whole idea of cryptocurrencies, going back to something that's top of mind. And I'm a little bit concerned about crypto, to be honest, because I was reading the other day, and I don't know if this figure is accurate, it sounded too high, but they were stating there's over 18,000 coins out there. And I'm kind of going, geez, who needs 18,000 coins? So Bitcoin, Ethereum, Dogecoin, or is it Dogecoin?
Dogecoin.
Those are all fine. But Shiba Inu, Cardano, Polygon, you can't start going down the list, and you end up with Jesus coin and Titcoin and shitcoin, and it's like, what the hell, But we are going to get to the stage where it'll become interesting how we bridge between crypto, CBDCs, and traditional banking and the metaverse. So, and who owns that space?
So now we've thrown the terms around metaverse. We talked about cryptocurrencies and all of that stuff. The one thing that we haven't mentioned yet is Web3, which gets mentioned quite a bit as well as a term when talking about metaverses. So maybe we should throw that in the mix as well, and get your opinion on how do you see the interplay between the term Web3? How is that defined, and how does that link to the metaverse, or does it?
Well, Web3 is meant to be part of this whole decentralization movement that will power the metaverse, and more than that, will power the ownership of our data. So I mentioned Decentralized, and we also need to mention Defy, Decentralized Finance. The idea being that we can put the financial system into the network and trust the network. So rather than in God we trust, in servers we trust. And we're definitely moving that way, and Web3 will be when that becomes something that's viable and real. We're still a way away from it. And what's particularly interesting from my side, I spend a lot of time talking with people about identity. My friend Dave Birch, who you'll know, wrote a book about identity as new money. And it's true, that if you have an identity that's verified on the network, then you can trade and transact. If you don't have one, then you can't. It's a binary option. It's a little bit like if you fly into Finland or Poland and you don't have a passport, you can't enter the country. It's exactly the same in the financial system. If you don't have a proven identity, you can't trade and transact. But the proven identity within the network becomes interesting, because the network doesn't recognize Poland and Finland. It doesn't recognize countries or borders. It only recognizes access and trade. And this is where I see a real fine line today around the challenge to governments, which is how do they regulate and manage a system that doesn't recognize their regulations or management.
It's actually interesting. I mean, a lot of people are touting the fact that with Web3, cryptocurrencies and DAOs, it's basically going to eliminate the need for banks and the existing current financial infrastructure, which I doubt is really going to happen. But what's your view on that?
Well, I mean, I've lost quite a lot of money on crypto in unregulated exchanges and companies. Equally, I've made quite a lot of money on crypto in regulated companies and exchanges. So it's a personal view, but I would not want to have my money in something that I could not trust. Now, I may say I trust my own management, and therefore I'll get a cold wallet and hold it offline in my office with my password in terms of my crypto investments. Trouble with that is that if I lost that tether, or if I lost that storage unit, then it's gone, and it's gone forever. And there's plenty of people who have lost, at the moment, I think every $1 in $5 invested in cryptocurrencies has been lost by people because they just can't remember passwords, or they lost the actual offline wallet that they were keeping it in. So that's the reason why, again, it comes back to, you do need banking, you do need financial services, and you need to have those who you can trust. That therefore means they are regulated. The problem with that is if they're regulated by a government, then you can be exposed to cash in, cash out tax and oversight, which is the reason why maybe it's better to be regulated by the network.
Yeah, I promise we'll move on from the metaverse and crypto topic very soon, but there's one more thing I want to kind of talk about, which is the fact that whenever you mention metaverse to anybody who's interested in cryptocurrencies, especially, they seem to automatically think that because we have a digital environment, a natively digital environment like the metaverse, however you define it, then automatically you should be using cryptocurrencies as the way to exchange value in those worlds. But I've been working in payments and identity space for a while, and I don't understand why. What is the thing with crypto that makes it better for this digital environments? Because I don't think so. But do you have any insight into why do these crypto people think that it's absolutely the only possible choice for the metaverses as an instrument of exchange?
So number one is it's not mandatory to use crypto and metaverse. Number two is the reason why people do is because it allows you to transact and trade across borders without any exchange. So everyone can accept Bitcoin or Ethereum. Not everyone will accept US dollar or Polish zloty or euros. So the fact is that the metaverse doesn't require crypto, but a lot of people who are in the metaverse think that crypto, it's easier in the metaverse.
That actually makes sense. It is a global currency for all its pitfalls. It is the same Bitcoin. One Bitcoin is one Bitcoin across the world.
Well, I've argued for a long time that there needs to be a globally networked currency that doesn't recognize borders. And it's interesting because I got into arguments many times with libertarians who, a comment I regularly make is you cannot have money without government. And they think I mean the Federal Reserve. And the fact is, what I mean is a government that you trust, which could be the network. So it doesn't mean a national government. It means you have to have money with government that you can trust. Otherwise, you can't exchange and believe that the money is safe. If the money is in a government that is the network, that's a government. That's fine. And if it's global, that's even better because it avoids, national boundaries and national interests.
But you also need to have some regulatory control over that as well, right?
Well, that's what I mean by government.
Yeah.
The government then provides the license to thrill. That they allow you then to trade and transact with trust. And if it's a network government, then you just have to ask yourself, do I believe this network government is going to do a good job? And if my money is compromised or my account is compromised, can I get my money back? And those are the real questions you should be asking. So we're going back to the metaverse question. If I took all my money and put it into crypto and then lived in the metaverse, could I have a government there in the network that I could trust would give my money back if I was compromised? That's the real question.
Yes. Well, I think that must be one of the most balanced arguments I've heard for crypto in a long time. So it's definitely worth thinking about. I think this notion of global digital currency is definitely an interesting one. But I did promise that this was the last metaverse and crypto question, so we are going to move on to the next topic, which of course is that, Chris, you have a new book out. It's like we mentioned already, it's your 17th business book. Yep, it's a little bit blurred on the video, but there we go.
There we go.
Digital for good, excellent. And yeah, we couldn't let you go without asking, what is the book about? What is the new thing in the 17th book that you wanted to write about? And And why should I buy it as a Mother's Day gift for my mom next weekend?
Well, I wouldn't buy it for your mum unless she's seriously interested in the future of the world. So basically, it's a book that was bubbling for about the last 5 years, and it dates back to when I visited Alipay and Ant Financial Group in Hangzhou, China, which was for the book I produced in 2018 called Digital Human. And as I walked around their office, there was a poster saying, "Remember, do good for society and good for the planet." Mm-hmm. And it really struck me. It kind of hit my heart. Main reason being is I hadn't seen a poster like that in any bank. But more than that, it was around, that's a really good purpose. That's a clear sign of what the company stands for. And so I started developing the idea of purpose-driven banking, and that you have to stand for something or you will fall. So do good for society, good for the planet. That's a really good purpose. That's a clear purpose. And it then developed out of that into stakeholder capitalism, and the idea that shareholder capitalism is, last century. If you only running a business to produce profits, you won't survive, because that doesn't make sense, particularly with Gen Z. You have to have a business that has a purpose to do good for society and good for the planet, and then clearly say what it is that you're trying to achieve as a company, as your values, which then translates into your vision and mission. So it goes far further. And in particular, with the climate emergency and Greta Thunberg and all the other stuff that was going on, it's integrated into ESG, environmental, sustainable, social and corporate governance areas. But around all of that, I then thought to myself, you know what, Chris, if you write this, it doesn't really stand up because I'm one guy and it'll come like a rant from one person. So I went around the world and invited all my friends around the world to write chapters. So I've got chapters from every continent, and interviews with many people around why this is important, and how the bottom line is finance and technology can be leveraged and used to make a better world and a better society. And that's the point of the book, which is from every continent, every part of the world, there's a belief that if we use technology and finance in the right way, we can save this planet. And actually, these are the levers to save the planet. It's not governments. Going back to what we were just saying before, technology doesn't recognize governments. It's about using technology and financial services to focus on biodiversity, renewables, and environmentalism and society, to be more inclusive, to be more literate, and to be better at dealing with the issues that we face today as humans.
That's actually fantastic and very deep. I mean, when we look at banking across the world, we can see a great differentiation between how digital some nations and some banking communities are. For instance, Asia Pacific versus America. So in putting your book together, did you find some large differences between various different parts of the world?
Bit of a tough one, Paul, because if I'm honest, I'd say that Asia, Africa, Europe and South America are probably more in line with what I'm discussing than North America. Mm-hmm. Having said that, one of the leading sustainable investment companies from Canada wrote a chapter in the book, and the movement started there. So it's not saying North America is behind, but I think when I look at North America, by way of example, there's a lot of discussion there about stakeholder capitalism, but that's the talk. The walk is shareholder capitalism. That because of the investment community and the way that management is driven by their bonuses and remuneration, the North Americans are very much focused upon short-term and short-term profit, whereas Asia, in particular, I would say is driven in a different way. And the best example of that is something I saw at a conference years ago, and then I was talking to a friend the other day, and was reminded to me. There was a picture of a lion in a river with mountains behind, and they showed this to Asian students and American students in a university research trial. And the American students saw the lion, the river, the mountains, and the Asian students saw the mountains, the river, the lion, or tiger, rather. And it's that mentality, which is it's completely different. So in Asia, they see the whole picture first, the background, and then they come to the focal point. Whereas in American and European students, to be honest, they start with a focal point, the tiger, and then look at the bigger picture. And the reason why I mention this is that from a sustainability and environmental viewpoint, you need to start with the big picture.
Yeah.
Whereas we tend to start with the near term, the immediate thing in front of us, the tiger.
I just need to check there. We suddenly had some audio issues from you, Chris. I don't know if it was just me, Ville, but did you hear it as well?
Some buzzing sound here.
Yeah, there was suddenly some interference. So your volume went down, Chris. I don't know, but I think most of the listeners will have heard what you said.
Yeah, we will push through and see how it comes in the edit in the afterwards or the after edits. But Chris, I did want to come back to ask a bit of the same question as Paul did, but from through the lens of this purpose-driven banking. Now, if I go to the website of any bank, I suppose these days, and look at the ESG values and the strategies, they all talk about being very ESG driven, carbon neutral. All of these things seems to be in order if you look at these bank websites, at least. So it begs the question that are we kicking an open door here, or is there something that perhaps we could use to identify what really is a purpose-driven bank and what maybe not?
Well, whatever bank website you're looking at, most of them, it's all shit. It's complete bullshit.
That's 2 jokes in an episode.
It's greenwashing. It's complete rubbish. They're not doing what they claim to be doing. They're just advertising and marketing. It's good PR to say we're investing in a sustainability project in the Amazon. It doesn't mean they're actually doing anything that's committed by the executive team across the organization. So one of the people who wrote a chapter in the new book is Gail Bradbook, who's a co-founder of Extinction Rebellion. And some people say to me, why are you supporting such an extremist group? And the answer is, they're not extremists. They are activists, and there's a difference. Maybe they break bank windows, which is what they do at Barclays and HSBC and other banks, but that's not illegal. That's not a crime. The crime is to have Barclays and HSBC investing trillions of dollars since the Paris Accord in fossil fuel firms that are destroying the planet. And so you need to have that in context. And in fact, normally, not every time, but most times, these activist protesters are leaving court without a sentence. They leave court with the judge's agreement that they were doing the right thing. And the reason why the judge would say they're doing the right thing is, I don't know if you've got kids, but I've got kids. And in 2050, there may not be a planet for my children, based on what's happening right now. And maybe they'll have to go and live on Mars because they travel on Elon Musk's SpaceX and go and live somewhere else. But I don't want my children to go and live somewhere else. The beauty of our planet is fantastic. And if the financial system, and right now the financial system is destroying the planet by funding fossil fuel firms, then I want to change that. 71% of the greenhouse gas emissions from 1986 to 2016 came from 100 companies. In fact, half of the greenhouse gas emissions came from 25 companies. It's the Shells and the Exxons of this world. We need to change that. And the only way you can change that is through the financial system. So what I see happening right now is activist investors and activist consumers squeezing both ends of the system to make the banks change. And you can't do it overnight. Anna Botan, who's the executive chair of Santander, made a really good point, which is we can't switch off coal in Poland, which is where I live, tonight, because Poland depends on coal. But we can force Poland's government and institutions to move away from coal through the financial system. And that's what we have to do. And we have to turbocharge that, because we need to make it 2030, not 2050.
Then I've got a deep-rooted question down to the title of your book, which is Digital for Good. Are we saying that technology and digital is the answer to this problem, or are we saying that re-educating the bankers and the financial system is actually the answer?
It's both, Paul. I mean, technology can make a massive difference in how we register the health of our world. And one of the things I keep discussing is the integration of different industries. So we talk about fintech and regtech and insurtech. What about medtech and govtech and farmtech and airtech and all the other industries that are out there? And if we could join them all together, what would that mean? So it's already happening. The insurance companies are joining up with the farming community to real-time monitor what's happening in fields, the health of the field, the pollution, the acidity, the rainfall, because that makes a difference to the crops, which obviously, therefore, if you have failed crops, you make an insurance claim. So if you can monitor that in real time, you get far more pre-knowledge and preventative action than if you wait until everything is messed up. And that's where I think we'll start seeing some really interesting developments again over the next decade, which is when you get joined up tech, not just fintech.
I had the same question about the metaverse in context of banking, and I gotta go with the same question here.
I thought we'd finished the metaverse.
We did, but I'm gonna have the same question as I did for the metaverse, which is that if we didn't really see anything that fantastic happening in the metaverse right now when it comes to banking, is there anything happening in purpose-driven banking? Is anybody doing a good job today, or is it something that we also are just waiting to happen in the future?
Well, I had a number of interviews in the book. One, in fact, two come to mind straight away. Adrian Gore, who's the founder of Discovery Group Financial Services in South Africa. And the purpose of Discovery Group is to make health through wealth. So one of the things they do, for example, is a life assurance product called Vitality, which uses Fitbit or Apple Watch to see if you actually go to the gym, and if you go to the gym, what your workout's like and how many calories you burn. And if you are using the gym, or if you are actively working out, they can see that in real time through their transmitters and give you lower life assurance premiums because you're being healthy. I interviewed Tom Blomfield, who's the co-founder of Monzo. And when Monzo started, they had a clear purpose, which is to give and provide financial services for everyone. And he gave me two examples, but the one that stays in my mind is, if you're homeless, how do you get financial services? No fixed abode. So they decided that if you had a guardian mentor who could give their address on your behalf, then you could have a bank account. And in fact, it's interesting because HSBC is now doing this as well. So homeless people who traditionally have been excluded from the system because they don't have an address are now getting financial services, which they never had access to before. And this is a mixture of technology and vision and purpose. It's about, what are you trying to achieve? And I mean, I see this in all parts of the world. I mentioned Alipay, do good for society and good for the planet. I don't know if you know the ant forest, but that was something that was dreamed up by one of their people one day. And then the team worked on the idea, and then they rolled it out. And it's now the biggest multiplayer gaming platform in the world, which is, if you spend your money wisely and ecologically friendly, as in you don't drive, you cycle, or you don't get a bus, you walk, Every time you do something that's ecologically friendly, you get points, and the more points you get, the more likely you are to get to the 100-point prize, which is they plant a tree. And they planted millions of trees. In fact, by now I don't know the number, but I'd say it's probably 1 billion trees across China, reducing carbon usage by 3 or 4%. And that's all happened down to one idea from one person about what about if we link how you use your money to being environmentally friendly.
One of the things these incumbent banks, the websites that I mentioned, talking about this, well, how fantastic they are with all these green values and things like that. Many times they offer these carbon offsets or services, so you can offset your carbon by clicking a button on the mobile banking application and so forth. What's your opinion on those types of services? Are they always good, or is there something we would need to know more when going for these carbon offset solutions? Well, in banking, in this conversation, for example.
Well, you need to mix the actions of an individual versus the actions of an organization, in that we can all do our own carbon offset activity and it'll have minimal impact. It feels good to do it. And so I fly around a lot, but every time I book a flight, I always accept the carbon offset option. Even then, it doesn't mean I should fly around a lot. It's like, I should stay at home, which I have done for 2 years, thanks to the pandemic. But when I look at the banks and the financial institutions, I guess the fundamental disappointment is they talk the talk and they don't walk the walk. So I'm not going to name names, but on my blog, I have named names. Nearly all of the large financial firms, in their annual reports and in their chief executive shareholder letters, say environmental responsibility and sustainability is our #1 priority. And then you look under the hood and they're investing in primarily fossil fuel firms and non-sustainable institutions. Until their behavior changes, every carbon offset of my flights or of your investments makes pretty much no darn difference.
Makes sense. I think I definitely feel good when I do the carbon offset, and maybe every little helps. I think it's an interesting balance, but we also have to keep an eye on the macro things as well.
Every little helps could be a good slogan for a greengrocer. Anyway.
Yeah,
could be. Yeah, actually, I want to sidetrack completely from the metaverse and everything else in your book. I've been told there's an interesting story that goes with you around Captain Cake. Do you care to share?
Well, during the pandemic, I was at home for the last 2 years with my 2 little boys who were 4, they're now 6, twins, and I got fed up reading them Julia Donaldson and David Walliams and Winnie the Pooh. So I sat down one night and I said, I'll tell you a story about being honest, Captain Kirk. But they misheard me and said, oh, Captain Cake, yay. And then it became a series of stories about Captain Cake, Lieutenant Chocolate, Sergeant Jelly, and Private Potato. The candy crew and the sweet candy flying through space to sweetly go where no sweet's gone before. And I floated the idea past my publisher and they contracted me to write 5 books and they're out there now. My favorite one is Captain Cake and the Rotten Tomatoes, because I really don't like the Rotten Tomatoes are covering every planet in brown goo, and Captain Cake has to save Earth before they cover us in goo.
I'm going to have to get the books. It sounds fantastic. I need to get that for the kids. I mean, you've got a future in writing, children books now.
Yeah, it's much more fun than fintech.
Yeah, I can understand that. Are they full with nice, drawings and pictures as well?
Yeah. I got one here. So again, I don't know about the.
Yeah.
Oh, fantastic. Okay.
Really great.
Oh, there you go. There you go.
Yeah.
So meet the candy crew. So this is Captain Cake, and this is Private Potato. And Private Potato has no special powers. All the other guys have special powers, but she's the most important member of the crew.
Fantastic. So fintech and children's books. I think there must be some common ground between these two. But let's not get into that today, perhaps. It's been fantastic. Chris, was there anything else we forgot to talk about today that you wanted to mention before we go?
Nothing particularly, although I guess I'm always thinking about what's next. And I'm really interested right now in quantum computing and multiplanetary finance. So there's two subjects for the next time we talk.
Absolutely. Quantum, that's really a rabbit hole we need to go to. And this planetary banking is something else as well.
Yes.
Looks like we have the topics for the next episode when we get you on, Chris. But this time, as we say on this podcast, is that time flies when you're having fun. And we've definitely spent our share of this hour talking with you, which has been absolutely fantastic. Chris, the audience, of course, wants to know where can they find you? Where can they ask you about your books? Your children or fintech or both, and where can they get in touch with you?
I'm easy to find, but thefinancer.com, captaincake.com, and Chris_Skinner on Twitter.
There you go. And that's it for this week's episode of Fintech Daydreaming. Again, this has been a great conversation. I hope you enjoyed it as much as I did, and Paul did as well. And as always, we will remind you of the mandatory things you have to do. Wherever you're listening or watching us, hit that subscribe button so everybody else is able to find these conversations equally fine as you have done so far. And if you liked what you heard today, please write us a review. The algorithms really love these reviews especially, and hit the 5-star review while you're at it. These are really helping us. We're doing this not for profit. We're not getting paid to do this at all. This is the only small reward we ask in return from you is a comment and a review. Thank you for that. And with that being said, this has been another episode of Fintech Daydreaming.
This is Fintech Daydreaming.